Now, I know JP Morgan put out a note after our last interview, frankly, where they downgraded your stock. Their chief concern was competition for postpaid subscribers, increasingly concerned about the subscriber growth outlook. Now, how does that factor in? Because we get some of these very interesting technologies, but if we've got people who are still saying, listen, they're worried about signups, aren't we just reverting to what has hamstrung Verizon, which is this one metric that's all people care about?
Oh, you're spot on. Yes, that's what we try to explain today. We have 5 vectors of growth. In the mobility case, we have sort of the upgrades. We have a lot of things we can do with our base, and that's how we see we're growing. We're also adding new features like the Play Plus that we will talk about probably later, where we use our network to do distribution. So there are many more places to actually grow than only net ads. Net ads, of course, is a piece of it, but clearly we have growth paths way beyond that. And we also go into fixed wireless access nationwide with our 5G network, totally new market for us. We also bought TracFone, as we discussed last time, which is a value player in the value segment that we can grow on. So we have many different vectors to grow, and that is what is putting this all together for us. And with the confidence we have right now and the assets we have, we feel really good where we are.
All right, well, last thing, a major competitors, AT&T, cut their dividend, which was something that I found dividend is pretty sacrosanct when it comes to the phone companies. All these growth initiatives, they won't crimp the idea that your board might think it's still okay to boost the dividend from here.
Yeah, I think that we have a very clear capital allocation priority. Number one, we invest in the business. We have done that for a couple of years. As we outlined today, we're now going on reducing the capital intensity in our business. We're actually going down to below 12% capital intensity. At the same, and the second priority is, of course, continue to grow the dividend for our shareholders. And that's something that me and my CFO always put in place for our board so they can do it. And then after that, we pay down our debt, and then we come to the repurchase of shares. And today we talked about that as well, that we will now start considering to do repurchasing earlier than what I had said before. So we feel really good about the optionality we're creating with our balance sheet and how we can serve our shareholders and how we can continue to grow.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.